Good evening. I'm Epstein with your metal market wrap-up, and this wrap-up is for the evening of Monday. And we're at February 10th, 2025, about 6:05 p.m. Central Time. And just maybe 40 minutes ago or so, President Trump took out his magic pen, and he signed a series of executive orders, appointing people to different jobs, a pardon for Illinois ex-governor Blagojevich, whatever his name was, for selling a seat that Obama had, or trying to, as it goes, but he's been pardoned now, and tariffs. So this round, and the president said there's other rounds coming this week, this round put 25% tariffs on all steel and aluminum imports into America, including finished goods. That was a loophole that countries were using to come in different ways. Oh, we have a manufactured product. It's not steel in that. Now, I don't understand the full definition of it. I'm not going to. I'm giving you the headlines of it, and we'll all learn just what this is, but it is important. So before we go too far, let's take a look at the things we have to deal with tomorrow. We have the National Federation of Independent Businesses coming out with their January Business Optimism Index. That comes out 5 in the morning, very early. Red Book Group will come with their weekly retail sales. They've been running between 4% and 5% recently. Fed Chair Powell, he goes in front tomorrow for a 2-day meeting in Congress. Tomorrow it's in front of the Senate Banking Committee. That begins at 9, and you know the questions are going to be, why aren't you dropping interest rates? What's going on? You know the story you're going to get there. On Tuesday morning, we're also going to see that we're going to get the amount of volume that we're going to see in 4, 8, and 17-week T-bills that are about to be auctioned at 10 in the morning. We're going to get, for grain traders, the supply-demand report. It's not expected to be a big one, but it comes out at 11. And President Trump, as I said, signed the tariff bill. And the countries that we get the most from are Mexico and Canada. So that's important. He mentioned out of left field he might be considering a reprieve for Australia, since they're buying planes from us right now. I don't understand that in any manner, but I'm not supposed to understand it. Remember, what he says is the way it is. So as we come back here over to the markets, the gold market's up on a myriad of things. Number one, I view tariffs as inflationary. They will add to the price of a car about 10%. And you'll say, wow, that's not so much. And you're right. Remember, in the price of goods that are manufactured in the U.S., packaging, the labor, all of that is the biggest component. The cost of the metal and things of that nature, whole different worlds when you get there. Just keep that in the back of your mind. That doesn't mean batteries aren't expensive, things of that nature. So the gold market's getting a bid, but you'll notice that most of the metal market's backing off. Copper's had one phenomenal run. And the word is that could be on the hit parade also for tariffs. So while it wasn't mentioned tonight, and it's backing off in part because of it, doesn't mean that it's got a clear ride here. The dollar, we'll see how it does, but if you look at most of the currencies, they are backing off an early trade in the evening right now. The bonds and notes, well, they're very stable. They're sort of sitting in energy prices, not doing very much either. So if we could, let's take a look at the gold market. Gold, if it were to finish here at 29.2270, well, you're already up. Today's only Monday. For the week, you're up nearly 2%. Remember, I was talking, I thought it could make a run towards the 3,000 level. Well, I feel very vindicated as it's moved from this area here when we were talking, and that's quite a move. Is it going to go straight up? I doubt it, but it could, yeah, but I doubt it. You can see how the pattern has just been moving higher all the way through, and the pattern is clearly one of higher lows and higher highs. The market is staying over the 18-day average of closes, which is over the 100, and the 100's over the 200. It's a classic bullish setup. Where the market goes to and backs away from has been the upper Bollinger Band, so drops tomorrow if you're down from it probably get bought by the pros, wouldn't surprise me, and they'll look for it a bit higher after that. In other words, until it's over, it ain't over. Now, adding fuel to this fire is Hamas decided today to tell Israel it's not going to deliver hostages as they agreed to this coming Saturday. And Trump this afternoon, as he was talking, said if they don't, as far as he's concerned, Israel, no pressure from the U.S. they can back out of the treaty. In other words, the fighting all begins again. You know, Hamas, what they're doing, I don't know if it's a negotiating ploy. It makes sense. What is Israel doing wrong? And I guarantee you Israel is probably doing things wrong in their eyes. Work them out. You've got the committees out of Qatar. See what you can do. But the fact that Trump said, and today he said it very clear, if by noon Eastern time, those hostages aren't delivered, as far as he's concerned, he can't speak for Israel. The truce, he's not going to hold Israel to it. That'll end it. Embedded reading. So when you get this embedded reading, and I keep trying to explain this to you so much, that is one of the signs that carries markets often higher. Be it when you have a bullish one or if you get a bearish one, lower. When you look at the gold-silver ratio, well, the market is now back up here. It's been up to this level before, and it keeps failing at it. We'll see if it can get through it. But this 90 to 92 level has been a problem for the market. Silver, as you can see, is backing off, but I look for good support to start developing 3187 to the 3180 level. The combination of the 18-day average in red and green is the 100-day moving average of closes. But that support. The market's still not in an uptrend per se on the swing line, and your momentum is starting to drop back down. In the copper market, you've had a couple of days now over the upper Bollinger Band. Look for a slide back into the Bollinger Band. Doesn't mean it has to drop a lot. If copper's put on that hit list, you need it. Now, what the president also did with copper is he is instructing the Treasury Department that he doesn't want to make pennies anymore. And via that, a penny costs, according to reports I read today, about 3.7 cents to make. How many of us are annoyed by pennies? I mean, a lot aren't, but I think a lot of people are. And, you know, I know whenever I get them, I'm throwing them back into the charity jar. I don't want to lose that money going to the charity. So I understand what he's saying, but there's a lot to think about with it as well. Lower low, higher high, we'll see what goes on. And that's why I throw in my change. That doesn't mean everybody does, but you know, there's a reason those jugs are there for the help, is tips, and there's always a charity jug around, at least the places, a lot of them I go to. Higher lows, higher highs in the platinum, overbought. It's the gold that looks the best. So if you're bullish, you buy the one that looks the best, is what I teach people. Suddenly, the dollar's back into an uptrend on this close. Now, admittedly, it's fighting a battle at the 18-day average. It got up, it backed off. Is this going to be a new up leg where it goes back up here into the 109 zone? Or is this a fake move where the market comes up and backs off? You have so much data coming out tomorrow, including the possibility of more tariffs by Trump being signed. He made that clear. Tuesday and Wednesdays when he will announce it, he said. And you've got the Fed chair 2 days in front of Congress. Just keep that in the back of your mind because nothing's ever easy when you come to all this. And as you look tonight, you see that off the tariffs, most of the stock indices are down in early trade, but that's down early in the evening. This market's been on a tear to the upside. It hasn't yet ended. We'll see where the market finally says enough is enough. We haven't reached that point yet from all that I am seeing. I do want to remind you that, you know, as I do this, I know that some of the things that you might ask are, what do these relationships mean? How do you work with them? So on. So we put together for you with our good friends at Modern Trader a PDF, volumes 1 and 2, Guide to Technical Indicators. When I tell you it's moving averages, stochastics, relative strength, MACD, GAN, Elliott wave, I can go on and on. Great examples of all this right there. We send it to you as a link. You can print it out. You can just keep it online, your choice. Go to iraepstein.com, free offers, or move your cursor up here. And there's plenty of other offers for you to take advantage of when you're there. I'm Ira. You have yourself a great evening. I'll catch up with you all in the other videos. And of course, in the morning, if you like this, please give a thumbs up. You take care.